Good morning, everybody. It's the morning of 6/20/2013. This is Dan Hussey from AUDUSD and I just want to do a quick video to highlight a trade we recently had in the Aussie US dollar. Bring that chart up now. Excuse me. I think it's important to go over the winners as well as the losers. This one happened to be a good trade, a winning trade, but point being is that yesterday we had a substantial news event that occurred, and this was a great example of how not to use news as a directional bias, because it didn't really matter what the news was. We just knew it would provide volatility yesterday, and I'm referring to the New York Fed's FOMC minutes that came out at 1 p.m. Central Standard Time yesterday. Anyway, getting down to the chart, the Aussie dollar has been in a clear downtrend for several months, really just for all of 2013. We're considering ourselves, and I'll move down to an hourly chart here, really with one type of trade that is referred to as an extension. In this case, it's a short. That extension short has an anchor, and it's drawn from the lows on 5/10/2013 at a 99.60. Anchor to lows has traded once, twice, 3 times, 4 times, 5, 6, 7, 8, and then finally a 9th time. Just today, this big hourly extension short actually hit its target. I would like to say that we actually took the 96.40s. We didn't. We were in a number of these shorts prior as we bounced on the way down. But the level we did take was what we call an ambush short. The ambush short occurs when you have a long, and this isn't even a long we would take because we knew the short traded first. When you have a potential long off the lows that breaks, you immediately draw up to the lows that broke here. Here's the low at a 94.35. You draw up the full short. So it's an ambush. It's the market, the bears break the long because the 6-2-8 line considers is the break of the long, and we pull short. Yesterday we sold the 95.45s, a small front run of this 50% level. Our stop was above the 95.75s, the 6-2-8 level, and our target was here at the 93.80s. This is an incredibly quick trade. Within an hour we were, well, actually it was within 3 hours because we actually got filled at about 10 a.m. and then it wasn't until 1 p.m. That the FOMC minutes came out, and the news volatility simply accelerated price action. And you can definitely see here by what the trend was. It was down. We were down in both the 4-hour extension short as well as the hourly or 15-minute, depending on what time frame you consider this, ambush short, and sold off very vigorously all the way down to not only to and through the ambush shorts targets, ours, but also to the target of the full 4-hour setup or hourly trend. That means this morning for the hourly trend, the larger time frame trend, we need to drag down, same anchor, new low. It means unless we go through lows here, we could travel all the way back up to a 95.63 for the next in the series short. Most importantly, however, our ambush short broke out of its targets. Upon hitting its target, you could have drawn up the next in the series, which was the entry highs to target lows. However, in this situation, we are going to be drawing up the entry lows to new lows, a new extension short, a very similar pull to our original 4-hour larger time frame chart. This means in the short term, we have a 93 resistance level that could take us down and through lows. That would break us out of our larger time frame extension And if we see this 93 level hold to target, we're going to start also drawing up new extensions as we'd be blowing out the larger time frame level. So I need to mark the prior lows to kind of remind me of that as long as we're in this extension short, we can potentially continue to the downside. Of course, breaks of either of these levels will warrant longs and ambush longs, an ambush long in the opposite direction. Anytime you have a break of a trade in one direction, you have the potential for an ambush in the other. Alright guys, so I just wanted to highlight that very quick trade we had yesterday, the pull from a 96.67 high to the 94.35 lows yesterday. 94.35, excuse me, lows. We sold those 95.45s and it went very quickly to target. So I think it's important to kind of recap those trades and talk about, you know, the circumstances surrounding it. We had FOMC news that accelerated price action. We weren't betting on the direction of the news. We had a very clear defined trade setup without the news involved, but the news accelerated us right to target. And we actually talked about this in the room yesterday. We had some great questions about, Dan, should we close our position before the news? And we said no. The news is, use the news to your advantage. It's the fuel for the fire, so to speak. You don't know if the fire's gonna, you know, which direction the fire might burn, but all you know is that there's the fuel and the catalyst that we got from a news event. So, all right, everybody, have a great day. Hope you enjoyed this video about a little bit of how we trade and certainly about one of our most recent setups. But have a great day, and we'll be back with you as price action develops.